The institutions are here. They're quietly buying and they're accumulating. That's over $600 trillion of value in the world right now. If you just get just a fraction of that into Bitcoin, Bitcoin doubles, triples, quadruples overnight. So people are going to start to realize, I've got to protect my capital somewhere. Where is the capital going to be reallocated from? It's going to be reallocated from bonds and real estate, because it's easy to manage your holding of Bitcoin. You don't have any tenants, you don't have a management company, you don't have taxes on it. You buy it, hold it, put it there, and it just holds its value against the depreciation of the US dollar. The dollar is being devalued to manage all that debt. We know it, it's reality. Everybody in the Bitcoin space is becoming clear about this, and people in my industry, in the traditional investment industry, are waking up to this.
One of the critical points Lavish makes is that institutional investors are beginning to understand Bitcoin's ability to enhance portfolio performance. By including Bitcoin in a diversified portfolio, investors improve their Sharpe ratio, a key metric that measures risk-adjusted returns. The realization that Bitcoin not only enhances returns but does so with an acceptable risk profile is a game changer for traditional finance. Lavish emphasizes that as this recognition spreads, institutions will increasingly allocate funds to Bitcoin. He positions Bitcoin as a superior form of sound money, distinct from gold, which has faced challenges due to manipulation and market inefficiencies. Unlike gold, Bitcoin's transparent and immutable supply dynamics provide a significant advantage.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
When Trump was elected, it was very clear. Leading up to the election, he came to the Bitcoin conference, he talked about Bitcoin, he talked about cryptocurrency, and he was elected, and Bitcoin ripped upwards from the high 60s all the way up to almost 110 at some point late last year, early this year. And so that has been a significant move. Now, since it ripped higher up into late November and into December, it's been grinding sideways. And I think, as I was alluding at the beginning here, it's a very healthy consolidation. We have a lot of old, OGs, the original gangsters who were holding on to these coins. They've been holding on to years and years and years, have made many millions of dollars from them. And I believe that there's a significant portion of those that the activity we're seeing, some of that is just OGs selling out and capitalizing on their efforts and their hard work but I'm not being funny here. That is hard work to hold on for this long. That is admirable. It's incredible. I believe that most of them still have a core position they're holding on to, and that's great. So they're going to go and get maybe a nicer house or do some things that they've been waiting on. It's a long-winded answer to tell you that I think this consolidation is healthy because the institutions are here. They're quietly buying. I know some extraordinarily intelligent investors in this space, in the traditional space, that are here now. I'm not talking about endowments or large institutions, like pension funds, but I'm talking about large hedge funds who are very smart and longer term holders. They're here and they're quiet about it, and they're accumulating. And if you look at the volumes at the 90 to 95,000 level, it's solid. It's really solid volume in here, which is creating, quite a bit of support. And we like to liken it to a coiled spring. And that's where I believe we're at on Bitcoin. And there's a ton of tailwinds we can talk about. But that's kind of the way I see it. It's a $2 trillion asset, $900 trillion of global assets. So let's talk through that. When you have institutions that are coming in and they see Bitcoin as a separate allocation in their portfolio, That's an important allocation. The smart institutions are starting to realize that the allocations to Bitcoin not only enhance their returns, but they enhance their risk-adjusted returns. That means it makes their Sharpe ratio better. When you include Bitcoin in a larger portfolio, it enhances your Sharpe ratio. That blows their mind. And when they see that, they realize that this is an asset class they need to start allocating to. Now, we can go all the way up to the top level and say, well, why is it important to have sound money like this? And sound money that's different than gold. Well, we've seen a lot of problems with the manipulation of gold, especially recently. That's one big part. When you look at the total assets, though, and you look at how much money is just in cash, $120 trillion in cash, or $300 trillion in bonds, $330 trillion in real estate, Bitcoin right now, up to this point, has only been taking market share really from equities, risk assets, and a little bit from gold, But as it gains traction and widespread adoption as its individual class of asset, that's much like gold, but an upgrade, like we just talked about. Well, then people are starting to realize that, oh my God, the Fed just lowered rates by a full percentage point, and the 10-year went up by a full percentage point. Why is that? Well, because inflation might run hot. Flash forward just 5 or 6 weeks later, and sure enough, you've had two prints that are come in pretty hot between the CPI and now the producer price index, where people are realizing, oh my God, we might have inflation flare back up here. So I need higher interest on my bonds to get a real return on those. I've got to protect my money somewhere. And so you will start to see, as we just get a deluge of additional treasuries being issued here and floated by the U.S. Treasury to just keep printing, to keep filling those deficit holes, regardless of how well Doge does. You're not going to clear that deficit. Let's just get real. It's not happening. It's just mathematically not possible where we are. Okay? So I'm glad that we're doing that. I'm in full support of it. But let's just get real here. We were running such large deficits that's not going to solve itself in a year. Not going to solve itself in 4 years, in my opinion. So people are going to start to realize, I've got to protect my capital somewhere. Where is the capital going to be reallocated from? It's going to be reallocated from bonds and real estate, because it's easy to manage your holding of Bitcoin. You don't have any tenants. You don't have a management company. You don't have taxes on it. You buy it, hold it, put it there, and it just holds its value against the depreciation of the U.S. dollar. The dollar is being devalued to manage all that debt. We know it. It's reality. Everybody in the Bitcoin space is becoming clear about this. And people in my industry, in the traditional investment industry, are waking up to this. And so where's the money going to come from? It's going to come from bonds and real estate. And when those start getting allocated over, just think about that. That's over $600 trillion of value in the world right now, Nico. If you just get just a fraction of that into Bitcoin, Bitcoin doubles, triples, quadruples overnight. We talk about having the strategic reserve. If that happens, well, now you've got game theory. You've got all the other sovereigns that feel like they've got to own some too. So I full agreement with David that, yeah, if you just hold everything constant, if you don't keep expanding the money supply, then Bitcoin will probably continue this adoption like this. But if you continue to expand the money supply, which we believe that it's just no way around that, and you now have a different structural adoption change, like it's a sea change of adoption in the investment world of this new asset, it becomes something that will break from those models. I know that Michael Saylor likes to say all your models will be broken, really talking about hyper Bitcoinization. I don't think we even need that for it to break through some of these. So that's kind of, but the models are important. It helps us manage risk, and they're self-fulfilling prophecies. People closely watch these and monitor them, and they trade around them. So it gives us opportunity to move in and out of positions and risk management strategies while we watch those. So they are important, but in the end, I believe that Bitcoin's adoption starts eating into those other asset classes, and it goes from a $2 trillion asset to a 20, 30, $40 trillion asset eventually.
Lavish views the overall shift in sentiment as overwhelmingly positive. He highlights the increasing frequency of Bitcoin-related discussions in Washington, D.C., and the growing acknowledgement of Bitcoin as a legitimate asset class. Clarity in regulation is essential for institutional investors. Lavish underscores that institutions prefer a well-defined legal framework over the uncertainty of an unregulated environment. With clearer guidelines, investment firms can confidently allocate capital to Bitcoin and associated infrastructure projects, fostering further adoption.
In one fell swoop, Trump could sign an executive order and be securing the Bitcoin that we have on the balance sheet and protecting it and possibly buying some more. The thing is, he wouldn't be able to buy as much. It's unclear how much he'd be able to buy and where they would actually hold it if he did it through executive order. And so people were disappointed about that. That's for sure. And that's why you're seeing some of this downward grind of price action in Bitcoin. You know, since David Sachs had spoken last week, since Trump has been in office and has not announced anything about a Bitcoin reserve or any sort of executive order on that. And so, and then you couple that with macro headwinds that we can talk about, you know, that's what's causing this. But all in all, to answer your question, no, I don't expect that bill to be signed into law this year. That I think it's going to take time, but that's okay. Here's the amazing thing. Here's the thing that people are not acknowledging that we need to acknowledge. Number one, we have an administration that's not attacking the cryptocurrency industry anymore. They're embracing it fully. I mean, Trump had his own coin, right? And so did his wife. So number two, Bitcoin is at the front end of that. Regardless of what's going on with the XRP, you know, I think that Bitcoin ultimately just weathers that small storm and comes out as the clear favorite to be in the strategic reserve, to be the main holding of the strategic reserve as a digital asset. That's what's happening. So, but this is front of the conversation in DC. This is on my Twitter feed every single day. I see people from DC, not just Senator Lummis anymore, talking about this. That's important. This is really important. It's a very, this is becoming something that has to be a conversation now. And it's front of mind for people who are lawmakers. And that's important, and we should embrace that for two reasons. Number one, we're not going to have that nature of attack from the last administration anymore. And number two, we'll probably get some good clarity on regulation going forward. And that's what we want. As investors, we want clarity. I'm not asking to be in the Wild West over here. I would rather have clarity and allow for institutions to start building their positions and their holdings in Bitcoin and start allocating to these companies who are building things in the ecosystem that are important, important solutions for people that prior to this, they just couldn't get off ground zero because of the nature of the antagonism from the Biden administration.
While some analysts speculate about hyper-Bitcoinization, a scenario in which Bitcoin rapidly replaces traditional financial systems, Lavish argues that Bitcoin does not need such an extreme shift to appreciate significantly. Instead, its adoption within institutional portfolios and sovereign reserves could organically propel its valuation. The expansion of the money supply, coupled with the structural changes in investment allocations, is setting the stage for Bitcoin's continued growth. While market models and risk management strategies play a role in shaping investor behavior, Bitcoin's increasing adoption as a global store of value suggests that its trajectory is firmly upward. Please like and subscribe.